Rohit Srivastav is with us. Rohit, good morning. Good to have you here with Sher Khan. Sanjeev Bhasin is with India Infoline. Sanjeev, good morning. Good to have you here as well. Rohit, more to go on the market?
Yeah, I think so. It's every day it's more clear that there's more upside than downside, at least in the near term, at least from the one month or 2 month perspective. So I think we have a double bottom now at 77.50, 75.50, which was the major low we made in September and again this month. And we should be looking at moving much higher from here, level by level. I think everyone would be mostly looking at 8,000 because of the expiration blues and so much of writing that has happened there. But my sense is that we should eventually head higher than that, and 8100 may be the first major hurdle. And once we get past that, then probably we'll retest the 8350 high once again. So that's what I expect the market to do over the next month.
How's the global picture looking, Rohit?
Very similar. Most of the world markets also reacted into mid of December, right after the Fed meet. So I think you saw all the panic selling take place across assets, not just equities, commodities, junk bonds, all of them. So what we have really seen is an extreme case of pessimism, or let me say it was a selling climax across assets that happened all together at the same time. Which is why what you're seeing now in the last couple of days is a recovery happening in all of those segments, one after the other. And as it just continues, you'll see one piling on top of the next item. So, so all the fears about falling commodities will clearly cool off. The fears around junk bonds will cool off. And all that will lead to a further recovery rally, I think, across the board around the world. So that's what you're likely to see. There's unlikely to be any negatives coming in the very near term because that's all been priced in altogether in the last month.
So the trend of falling commodity prices, rising dollar, that is behind us. That's what you're saying, Rohit?
My sense is it's very much behind us. Some people may say it's temporary, but even temporary can mean 5 weeks of rally. So whether it's temporary or permanent is a separate debate. But definitely the fall that was happening for the last 8 to 9 months. So if I say the CRB index, it's been falling since 2011. So I would say that entire fall may be complete. That's almost a 4-year bear market in the commodities segment that may be complete. Now will the next counter trend move be a 6-month affair, 3-month affair, size? Those are that's a more detailed discussion and requires more insight. But the fall is complete, and that limits my downside risk here on the commodities side. So I think that's where we'll see a major turnaround, or at least a lot of relief come to the interested or related stocks as well.
Right. You mentioned briefly junk bonds, and I've heard this from others as well, that remain very focused on credit markets and things like high yield energy related bonds, junk bonds. What exactly are we looking for there? People say, well, that's where the lead indicator will come from for problems in markets, like how we saw things sort of unraveling in 2007. What exactly are we watching out for there?
Yeah, so to put it in perspective, I think, a lot of noise gets created essentially when things reach an extreme. So all the noise around oil reached its peak when you actually saw it fall below $40. People wouldn't be screaming when it's at $100. So similarly, we were looking for higher bond yields, and essentially that happened not in the treasuries, which even I was looking at all the time. They ended up happening in the higher yielding bonds, essentially the lower rated credit rated bonds, maybe the BAAA or lower bonds. So those bond yields actually shot up, and essentially because of the risk in oil, because a lot of capacity got built around oil in the US because oil prices were high for a prolonged period of time. Even when the commodity market turned down in terms of gold, copper, oil remained above the $80-90 mark for so long that all that built up in capacity that took place has a much higher cost of manufacturing. And now when prices fall to $35, a lot of the bonds that went into financing it were coming at at the risk of defaulting. Now, these are events that will happen. The way the commodity cycle works is that a lot of companies go shut capacity when prices actually fall. So you always get a period of overcapacity, and then you get a period where capacity shut off and things normalize. So we are going through that phase, and this fall in commodity prices will lead to some shutdowns and then some recovery. But the big question is going to be whether it's going to affect everything across the board. And we've already seen one round of major selling in the junk bond market. So the way I would look at it is right now you look for some relief even in the junk bond market, because those instruments have also become very oversold. If you just look at their charts, they've fallen vertically down. So they would have also have overshot the downward expectations. And so as those yields recover from there, you'll need to take a call on the big picture. So I think you'll have some time to take a call on whether the commodity situation is getting still worse or whether it would really spread to other parts of the economy. So those are questions that we'll have to raise in the coming months. But the panic has been done because people were just reading into this rising interest rate environment from the Fed and selling almost everything, and that led to a panic sell-off across that segment. And the effects of that we may only be able to gauge not today, but in the weeks and months ahead.
All right, fair enough. So you're saying 8100 first, and then could head to 8300 in this current leg, right?
That's right.
Okay, fair enough. Let's get Sanjeev Bhasin in as well. Sanjeev, what's your view?
Yeah, morning. Well, for once, Rohit and I share the same view. We thought that opportunity of 75.50 and till 7700 was a brilliant opportunity to buy. There was extreme fear. The VIX had not fallen anywhere, not risen anywhere near the September lows, and most of the event discounting regarding the Fed and GST was already in the price. So we turned bullish there, and we think yes, 8100 is definitely on, and who knows, you could have it maybe next week because of a short squeeze, because consensus 8000 call right, and most of the banks and other high betas are still trading at a discount, is telling us there's a lot of short, and due to paucity of expiry on next Thursday, you could see another leg of the rally take you to 8100. So we think 8100 is definitely on. Whether it happens next week or the week after that, that is a matter of time.
Okay, Sanjeev, you talk about individual stocks as well. So you want to tell me what you are most bullish on and what you really like?
Well, for the present year, we've been bullish on few stocks, which I'll just highlight, which have been exceptional performers. Reliance in the heavyweights, BEL in the mid cap, IGL, Indraprastha Gas, NBCC, Tata Elxsi, Prabhat. And these stocks have outperformed, and we continue to think there is enough room on the upside for another 25% upside. For 2016, what would be our theme, Prashant, would be certain laggards and certain sectoral weak performances which we think can outperform. So L&T in this range of 1250 to 1300 is a very, very attractive buy. We have been recommending to most of our clients and HNIs that this is the best time to accumulate L&T with a 1 year perspective. The other is a Make in India theme, where Bharat Forge, after the recent correction, again has given a brilliant opportunity. Close to that 835 to 850, Bharat Forge is a top recommendation. And thirdly, Coal India, where again we are putting our theme on the revival of capex and streamlining of these issues on power and coal, and we think there is immense value in Coal India for a 25% upside.
There's a story, I think, in today's Hindu business line, which I think says that, which talks about few buyers for Coal India. I mean, a few buyers for Coal India's coal. Because Coal India is entering a peak production season, inventories are piling up, and generally. Demand is not really that strong. Realizations have also come off quite a bit, but I think sometimes news is already known, it's already in the price, so keep an eye out on this. So you're saying Reliance, BEL, Prabhat Dairy, NBCC, Larsen, Bharat Forge and Coal India.
IGL, Tata Elxsi, those have been the past performers. But at present prices, L&T, Bharat Forge and Coal India. And of course, the trading opportunity was immense in Axis and ICICI, which actually we took a lot of advantage. 435 Axis Bank and 248 ICICI. We thought the selling was overdone. And even though they moved up partly, we still think there's another 10% upside in both those stocks.
ICICI and Axis.
Yeah, right? In the private bank.
Still at about 260.
Prashant, we took advantage of this fear psychosis on two of those private banks where they made new lows. And, like we recommended closer to 435 and closer to 248. We had a very, very high overweight on both those bank counters.
But those are just quick trades, right? I mean, it could go either way. I mean, 240. If it got to 248, it could have gotten to 235 as well.
Yeah, but anyway, the risk reward was much in our favor. So we've been having a lot of bull call spreads, not on these two. In these two, there was an outright buy, but on a lot of the other high beta, L&T, Bharati, stocks which are, which have been beaten down for more out of fear than out of value. We thought there was immense opportunity over there.
Okay, we put out BHEL as Sanjeev speaks. I think Sanjeev said BEL. That's Bharat Electronics, not BHEL. So we could make that correction in the earlier stack of stocks. So, all right. So, I mean, he's talking about three names actually, essentially: L&T, Bharat Forge, and Coal India. Here, Rohit. So, last 5-6 days we've seen the commodity stocks, oil and otherwise, moving up. There could be more here, Rohit.
Yeah, I think there should be more. What tends to happen, and many of these stocks have actually fallen for most of last year. So for several months they've been in downtrend. So even if you do a good 23 to 38% retracement of that entire fall from the current levels, adding another 20% or 30% is very much possible. So yes, definitely there should be more upside to the commodity stocks, and the percentage gains tend to be higher on rebounds, so that's why you actually look at them. And if I actually see between September and November, they did not break to new lows, so they actually held out even against commodity prices, like copper itself had fallen, below the $2.1 mark, and you didn't see the same kind of selling happening in maybe Hindalco, so those stocks held out, and that was a sign of strength, and I think there should be further upside, including in even the oil related stocks, as you said. Reliance has definitely been holding out against the market as a whole, and so it could actually head up to maybe the 1100 mark, 1000, and then if it crosses 1000, maybe closer to 1100 is where the next major resistance will come out. So Reliance has been one of the strong performers of this period, holding against the fall, and now should probably see it higher. At the same time, you've seen a lot of weakness in a stock like ONGC. It's been for several months, and it may have completed that decline. So again, there we look for a retracement, but even if we just go back to the last swing high, there could be a good 15-20% more from the current level. So it's extremely oversold, and I think there could be more upside in ONGC as well.
Okay, all right, more. So ONGC has done about 10%, I think, from just before the Fed decision, and Rohit is saying there could be more. Just one last quick point, Rohit. I think most people have kind of given up calling the top on the US market. It's amazing how resilient the US market has been, in no small measure because of, I guess, the scale of share buybacks, etc. What's your view there?
Okay, so when you actually look at the US market, and even when we look at the Indian market, what we do now a lot is intermarket analysis. And when you do that, you need to look at each of the segments, look at the Dow Transports, look at the Russell, look at the NYSE Composite. Now when you do that, you'll find that there are some indices that have fallen much more, than the Dow and the S&P or the Nasdaq itself. So there are indices that are already indicating that they've topped out and you might not see a new high. At the same time, it looks like there is a possibility that the Dow or S&P could sneak out one more new high through this process. But when we go and look at longer term charts like the monthly, for example, and we look at the momentum indicators there, many of them are in sell mode, so they are actually showing a loss of momentum. But what you're seeing is a lot of gyrations both on the upside and the downside as it sneaks out one more new high. So it's very, very similar to what we saw post the Modi election in India. The Nifty kept, first it hit 7,800, then it did 8,200, came back to 75 and to 84, and so on, and eventually reached 9,100. Now just do that at a slightly larger scale and spread it out over, a 1 year, 2 year period is what you're seeing in the US. The pace of the rise is slowing down. You're seeing a lot of gyrations. You get this sudden deep correction, then it sneaks out one more new high, then you get another deep correction. But in that process, some indices, like I said, the NYC Composite, the Dow Transports appear to have topped out. They'll probably not see a new high again. And these divergences will eventually be a reason for, calling a major top. But you're right, as it's bouncing back and showing resilience, you might not have the final top in yet.
Rohit, thanks very much. Good speaking with you. Have a good long weekend. Sanjeev, thank you very much for your time. Have a good one as well. Thanks indeed.